Hello and welcome to this week's SelfWealth Live. My name is Owen Rask. As always, it's my pleasure to have you with me. Today we're going to be talking about a whole range of different companies. We're actually going to talk about an ETF too. The ETF that I would probably say is the most popular thematic ETF in Australia. We're going to talk about bank stocks. So I'm going to show you how I analyze bank shares. So we're going to use Commonwealth Bank as our example. We're going to talk about just some extra little things, on the side here. We're going to do a rehash of the 5 things that we covered off last week in terms of like a stock picking checklist and how you can leverage that for your own use. So we've got a heap of things to get to today. As you'll know, my name is Owen Rask. We're going to talk about a lot here today. I'm an analyst by training. I'm a founder of a company called Rask Australia. You can throw your questions straight into the YouTube live comments box there. I'll be making use of that today, so please go right ahead. Chuck it in there, say g'day, let me know that you can hear me. You can also find us on social media. I was on Twitter this morning under the hashtag SelfWealthLive hashtag, and I was trying to find if anyone sent any questions in advance. No one did, which is a bit surprising. So if you are on Twitter or you're on any of those, you can find the SelfWealth using the handles that you see right in front of you. Which side is it for you? That's this side for you. And you can use the hashtag SelfWealthLive. So say g'day, jump into the chat. G'day, Pat.
Hey. How are you?
Today is limited to general financial advice only. I don't give out personal advice via YouTube Live. In fact, I don't actually do personal advice at all. I'm not qualified to give personal financial advice, although I have done all of my financial planning study. I chose not to do it. Am I muted? I hope not. Jared, can you hear me? I'm just going to check to see if I am muted. Let me just have a look. See here? I shouldn't be. I think I can hear myself. Jared, can you? Oh, there we are. Pat, you scared me there for a minute. Thought I was muted. Maybe it's all okay. So, okay. Yeah. Sorry guys, I got a bit worried there because sometimes I'm sitting here and I'm talking to you, but I can't hear anything back. I've got these AirPods in, these fancy looking AirPods, but that's just so Jared and I can chat there. You were silent for a few minutes. Okay. Hey, Plant One's back. Good to see you chatting. G'day, John Z asks, g'day Owen, do you work for SelfWealth? Actually, I don't. SelfWealth and I just happen to have a mutual kind of relationship where we want to help people invest better. So here I am. I run my own company, but I work with Jared and the wonderful team at SelfWealth to bring more education to people. So you may see that we've done some videos before on the selfwealth.com.au website /learn to invest. We've done heaps of educational videos together in the past, and we thought, hey, why not just do a live chat as well? So just one more thing on my disclaimer at the end here. Just if you need to, you can refer to my financial services guide at rask.com.au /FSG, or you can observe the SelfWealth disclaimers down the bottom as well as the FSG. And if I talk about performance, we're going to talk about ETFs today. So if I talk about the performance of something, please just go into the documents, read the PDS, the product disclosure statement, and remember that past performance is not indicative of future performance. Okay, so we've got Charles Liptak asks, SFG to that moon. Well, I don't know what that is. Maybe I'll have a look at that in a second. I don't know about to the moon, maybe to da moon. I don't know about that either, but that's a great question or great point. Okay, so I want to cover off 3 things just before we get into the stock picking checklist that we went through last week. First is that, as you know, SelfWealth now has instant deposits. So if your bank has OSCO, that's OSKO enabled, it means you can instantly transfer some cash into your SelfWealth account, which is cool. The second thing is that live pricing went live we're on a live, and I'm telling you, live pricing went live for Aussie stocks on Saturday. So Jared told me just before we got on air that live pricing is now available. So that's super cool. And we'll get into the platform in just a minute. And there's also a trade promo. This is the third thing I've got to tell you about, which is that in September, you can, if you place 3 trades, you can go in the draw for a chance to win 100 free trades. So if you place 3 trades, if you're buying 3 shares, or a couple of ETFs maybe, you can go in the draw to win 100 free trades. That's pretty cool. Cool. Plant 1, good to know. You're giving thumbs up. I think you're giving thumbs up to the SFG comment. Cool. Okay, so what we're going to get into is I'm just going to, one fun thing. If you have any support questions, you can head to selfwealth.com.au, go to the support, or Jared's here. Jared's on a chat with me separately, and he can answer some of your support questions in there. If I put any comments into the live chat, I'm going to put a little thing there with my name in it so you can see that it's me. Okay, so I just want to go over this from last week. I actually remember that I didn't paste this into the chat. So I'm just going to try and do this. Okay, so if you just jump in the chat now, you'll be able to see the checklist that we talked about last week. So I'm just going to say from Owen. I'm just going to dive this in here. 1 is companies with competitive advantages. So we're looking for companies with strong moats. So I'm just going to go like this. 2, like this. I'm going to go 3. Oh, that one. These are just my comments that I'm putting in, guys. There we go. Number 3. Number 4. In the chat here. 4. And number 5. So what I'm doing is for those of you that are just watching and not actually in the comment section, I'm just putting in the 5 things from my investing checklist and what I use. So the first thing, just to recap from last week, I'd strongly encourage you to go back and look at the video on Netflix that we did last week. We analyzed that company together. We're looking for companies with strong competitive advantages. We're looking for businesses that have management teams with, that are aligned, they own shares, they have long-term incentive structures within the circle of competence. So what is your circle of competence? Number 4, we're looking for structurally growing industries in important sectors. And number 5, we're looking for companies that, we've done some valuation work on and we're comfortable with that and we know the downside/risks. Okay, so yes, KW asks, am I able to go back and watch the live sessions that we've done previously? Yes, please jump on the YouTube channel, the SelfWealth YouTube channel. You can click subscribe there and you can see all of the videos from the past. Just hit the videos tab and you will see everything. Okay, so let's get into the platform. Okay, so the first thing I want to talk to you about today is basically these things called thematic ETFs. So what is a thematic ETF? Well, this goes back to a video that we've got on the SelfWealth website. SelfWealth, learn to invest. This is my wonderful typing skills while talking. So you can go to the SelfWealth website and you can see here that there are some videos that we've done before which teach you how to invest and some tips for building a portfolio and doing that sort of stuff. And one of the videos actually covers basically the difference between building a portfolio from scratch. This one right here is really popular on the SelfWealth YouTube page. You go and check this out. And what we actually talk about there, never mind that weird screenshot of me, what we're actually talking about is we're talking about when you start investing or even when you've been doing it for a while, what you want to do is start with a really core portfolio or strong portfolio. So this is like, this is the center of your portfolio. If you think about it, like the earth with the moon going around the outside, the core is what you depend upon. It's, everything that we need, like low cost ETFs, if it's blue chip shares, those types of things, dividend paying companies. And then around the outside, we can take more, risky exposure. So what we're doing there is we're just looking at adding things that are higher risk, maybe shorter term, and we're looking to take like a different exposure. And so thematic ETFs, in my opinion, fall into that bucket of satellite, those things going around the outside. So they're a bit riskier. I can see that T. Apena just asked in the chat, thoughts on uranium stocks. Now, so this would be a good example of maybe investments that would fall into that satellite exposure. So if we looked at, say, I don't even know what would be a uranium stock. If you give me a uranium stock, Tia Penna, that would be great. So what we're trying to do with that outside satellite exposure is we're trying to find companies that we might think, hey, for the next 2 or 3 years, this sounds like a really interesting idea. And thematic ETFs are one such example of that. Now, you know a thematic ETF when you find one in the wild because it's not like a normal ETF. So basically anything that's not normal. So what do I mean by that? A normal ETF is like the BetaShares A200 ETF, which is an ETF that I own, which is this one here. It just tracks like the top 200 stocks. Very simple, very familiar to you, just uses a market cap index. Another one that's really kind of normal, vanilla, boring, that goes in the core would be the Vanguard Australian Shares Index ETF. So this ETF, the ACDC ETF, is what I would put in a thematic basket. So I would say this is a thematic ETF. If those other two, the Vanguard VAS and A200, are vanilla, boring, go in the core ETFs, the ACDC ETF is not that. It's more like differentiated. It provides a different type of exposure. So if we come back here and we go to here, you will see that over the last little while, the ACDC ETF has actually, you can see the number of trades going through down the bottom here. You can actually see that the ACDC ETF has got very popular. Now, this ETF here does something different. I'm going to show you how you can work out that it's a thematic ETF. But you can actually just look at it and you can see here that over the past year, or say 5 years, this thing has just grown very quickly, which has far outpaced something like the A200 ETF. In fact, as we'll discover in a moment, it's actually grown at double-digit rates. And the reason is that it doesn't provide the same type of exposure that you would get from the Vanguard ETF that we spoke about before, or the BetaShares A200 ETF. Tia Penna, you said, thanks for mentioning my name. For example, ACB. So I'm going to write that down. I've got my marker here. I'm going to write down ACB and we'll come to the end and I'll have a look at that one with you. Okay, so here we go. We've got the, let's turn off my Slack. So if we go here, we'll actually look at how do we find out more information on this ETF. I've actually done something already in advance for you. But if you look here, whenever you see an ETF, now let's quickly jump back to the Vanguard one. Whenever you see an ETF like this just here, what you'll see is that the first name says Vanguard, then Australian Shares Index Fund ETF. If we go to like the NVW, you see Van Eck Australian Equal Weight ETF. Or if we go to this one, this is the Van Eck Global Clean Energy ETF. Or if we go to STW, we can see it says Spider ASX 200 ETF. So what this first thing tells you is which provider offers that ETF, this thing right here. So in the case of ACDC, we can see that this is ETFs, and that stands for ETF Securities. So if you want to find out a little bit more about the ETF Securities ACDC ETF, we can just go to the website of ETF Securities. We can find it under products. We can go down here to ACDC and we can see what it invests in. Every ETF in Australia will have something called a fact sheet, which you can see just on the right hand side here. I've already clicked on that and I've loaded it here. So I'll bring this up. So here we can see all of the different information about the ACDC ETF. But what's really important at the top here is we can see the ETF Securities Battery and Tech Lithium ETF, ASX code ACDC, offers investors exposure to the energy storage and production megatrend, including companies involved in the supply chain and production for battery technology and lithium. So really interesting description there. And straight away, we can see that this is an ETF that's focused on something other than just all of the market, which is what the A200 or VAS ETF are involved in. This one here is specifically targeting the supply chain and production of for battery technology and lithium mining. Now we can come down here and we can see, if we keep scrolling, we can see how the index is put together. So every ETF in Australia, every passive ETF in Australia, and almost every thematic ETF, as far as I'm concerned, has an index. and the ETF just simply follows that index. So the ETF just follows whatever is in the index and then buys and holds whatever the index provider says to buy and hold. So here we go, we've got the Selective Battery Value Chain Index, tracks the performance of companies that are providers of electrochemical storage technology and mining companies that produce metals that are primarily used for the manufacturing of lithium batteries. And as we know, lithium batteries are kind of the future of battery storage. So if we come further down, we will see, and most ETF providers do this, we will see here where the ACDC ETF is invested. So you can see United States, Japan, it's got a little bit in Australia, it's got South Korea. You can see how big are the companies inside. So we've got large cap, mid cap, sector allocations, we've got industrials. But if we keep going, oh, actually it's not here, but if there's actually on the back on another, oh, here it is. If we see here on the right hand side, we can see the top holdings inside the ETF. So we've got BYD Co, we've got Pilbara Minerals, which is the Australian business. We've got Levent Corp, which is a United States-based chemicals company. We've got Solar Edge, we've got Samsung, we've got Tesla further down here, Anheuser. So we've got Mineral Resources, which is an Australian company. So these businesses, all of these businesses fall within the energy storage and production megatrend. So that's what we can see here, is that these companies, if you invest in the ACDC ETF, you're getting exposure to these individual shares. And one more thing that I'll add on the end here is that the actual ETF, I believe, is equal weight. So if we come in here, we can see how the portfolio is put together. So ACDC uses a full replication strategy. That just means that it follows everything in the index, meaning it holds all of the shares that make up the index. It is equal weighted, meaning each holding makes up the same portion of the portfolio each time the index is rebalanced, and therefore contributes equally to the overall performance. Now, I want to come back in here into the SelfWealth platform and show you that here we can see the ETF has gone through some pretty big ups and downs. You know, you can see here, like even just over the last 6 months, this thing looks like a roller coaster. It's bouncing up, bouncing down, bouncing up, bouncing down. And one of the reasons why this happens is that the ETF itself is pretty concentrated, meaning that it invests in a few companies, just a few, and it invests quite a bit of money in those individual companies. So we can see here that the top 10 companies make up a big portion of the overall pie. So like this one's 5%, this one's 3.8%. Whereas if we looked at something like the IVV ETF, which is the S&P 500 ETF, you would see that it's actually quite a bit smaller. And so I show you this because what we actually have here is with what we actually have here is we can see the fund is up 66% year over year, and the benchmark is up 69%, so very similar there. There is a little bit of tracking error. But what this actually shows you, this ETF is showing us why someone would use a tactical ETF or a thematic ETF in their portfolio. So it's actually showing you what is happening inside the ETF to make it grow so fast. I had a question the other day come through that asked, oh, and how does an ETF like ACDC actually make money for investors? Because it doesn't keep holding all the shares. Sometimes they come in and sometimes the shares go out. And the way it happens is you can think of the ETF just like a normal portfolio. If you have your portfolio here in SelfWealth, you're going to be buying and selling shares too, right? And you're still going to be making money if you invest effectively. The ETF does exactly the same thing. It just does it with more money from everyone else putting in. So I'm going to show you one more thing, unless anyone has any questions on the ACDC ETF. So Chanda S says, for Ben Walker, TNT for cybersecurity is a good one to have a look at. TNT, I'm going to give you some ideas to chuck, just quickly before we get to ACDC again. I'm actually just going to chuck some stuff on your watch list here, Ben. So this is a company called CrowdStrike Holdings from the US. It does kind of like endpoint cybersecurity. So this is Crowd, CRWD. You can add that to your watch list. Another one is Okta, which is a company that I own from the US. It does like workforce management and single sign-on. The next one is great question, Thuman. I'll just answer that in a second. The other one, so TNT, Tesserent, is an ASX listed, I think it's a small cap business. Let's have a look at the market cap of Tesserent, 235 million. What else do we have? Even companies like Microsoft. Microsoft has the platform, basically single sign-on, which is a really effective one. What else do we have? If anyone else knows any cybersecurity stocks, chuck them in the chat and we'll have a quick look at them. But there we go, we've got CrowdStrike, Okta, some of my favorite. There's actually a cyber ETF. Hack. So what we can actually do, I'm going to show you a little trick here. BetaShares Hack ETF. So we come here. So we're on the BetaShares website. If we want to get a list of companies that we could add to our, of course, Zscaler. So Zscaler is another stock. We can talk about Zscaler. This is another company that does cybersecurity. And so you can actually use these ETFs as a way to get Cloudflare, of course. How could I forget Cloudflare? Cloudflare, and then there's Fastly. So FSLY for Fastly. This does CDNs and rapid fire internet connections for servers and protects websites. And then we've got Cloudflare, which is Net, I think. Cloudflare is another one. I wish I could open a US trading account, but I'm a displaced US expat. Well, if that's the case, you can just look at things like these BetaShares, this BetaShares ETF that invests in a lot of these cybersecurity stocks. So, hey Owen, this is from Ash K. Bard. He says, hey Owen, can you please cover ETF FANG? I'm interested in understand how it would work for equal weight quarterly rebalancing. John Z says, is the ETF, this is the ACDC ETF, balancing done by value or by ratios? So the rebalancing of something like ACDC is just going to be equal weight. So meaning that however many companies are inside the index or ETF, they're just going to do it evenly split amongst all of those number of shares. So if there's 20 shares, they'll do it at, 2.5% each. I'm not saying that there is, but if that's just an example. And so that's how they reweight it. So it's not done on ratios or anything like that. So it's very simple. And so, Akshay, you asked, the FANG ETF. So the FANG ETF is another similar ETF. It's also done by ETF Securities, invests in US shares, and it obviously focuses on the FANG stocks. So here we can see over the last 6 months, it also has been a bit of a roller coaster. So one thing I will say about all of these ETFs, these thematic ETFs, and I would include that FANG in the thematic ETF because it's focusing on one theme, which is FANGs, whereas ACDC was focused on one theme, which is batteries. This is focusing on the FANG stocks. What I would say here is that this ETF is actually pretty narrow, pretty concentrated. So if we go into FANG, where is it? Here we go. So here we can see, if we scroll down on the page, we can see that they're the top 10 holdings here, and you can see how much are in each of them. It's very narrow, meaning that there's not many companies actually inside the ETF. Tesla's 11%. So you can see it's very narrow, but that's probably what you want if you're investing in an ETF like that. Okay, so strictly mining specky, says Adam. Ben Walker, anything for artificial intelligence like brain chip? Well, that's a big question. If anyone on the chat wants to help Ben Walker there, try and fill in the blanks for anything to do with artificial intelligence, go right ahead. I think there is, because this is an ETF themed week on SelfWealth Live, I'm going to try and keep it related to ETFs. But here we go, Ben Walker. I'm going to give you again, so we can go BetaShares, artificial intelligence. So here we go again. We can drop in here. And again, you can see which companies are inside here. So this can give you another list to add to your SelfWealth watch list. Speaking of watch lists, this is what I wanted to get to before. So if we come into our stock watch list here, you can see that I've just created a demo account, and you can see the different companies on the watch list. Now, one of the things that, Vinoth, good point, NVIDIA for artificial intelligence. That's a good one to keep an eye on there, Ben, because NVIDIA is actually an interesting one. It provides GPUs, graphics processing units. GPUs, so just for a bit of tech jargon to throw in here. So a CPU typically fires at one execution. So it'd be like, binary, like on, off, on, off, on, off. But what a GPU can do is it can effectively add thousands of decisions, not complex decisions, but thousands of decisions in one go. So for example, when you look at a computer like this iMac I've got right here in front of me, when you look at this iMac, you would look at the specs for the GPU if you were interested in graphics, because graphics require lots of tiny little decisions like this color, that color, motion picture here, motion picture there. So you'd be looking at the GPU. And for artificial intelligence, where there's lots of little decisions like that, a GPU is very much in demand. So NVIDIA is actually the leader in desktop and server-based graphics cards. There are some others like AMD, and on mobile there are some challenges there, but NVIDIA obviously benefited from a lot of crypto miners also using their GPUs for mining. So here we go, we're back on the watch list on SelfWealth. Now, these are the companies that we've covered over the past few weeks. Again, you can jump onto the selfwealth.com.au website and you can find all of the companies that we've covered, or you can just go to the SelfWealth YouTube channel and subscribe. So, hey, yeah, ETF Securities is watching. Wonderful. Hey, Ben, we have the ETF Securities Robotics and Automation ETF that includes AI exposure too. Fantastic. There we go. Wonderful. And Artyom says, whoa, an ETF account is here. There you go. Look at that. Wonderful. Okay, so here we go. Netflix was what we covered last week, and I've left a note here to say I covered Netflix. What is?
Can you just go through your computer?
Yeah, that's what I'm going to do. I'm going to take these off.
Yep, you're good.
Alrighty. Okay, I think we're good, and I think we're back in action. So, thankfully, yes, we are back on. And I don't know what happened there, guys. I think my AirPods, which I've now since taken out, are going somewhere else. Angus says, I was just going to say this is better than Zoom. Okay, so fantastic that we have Nicola from ETF Securities here helping us out with some questions. Hey, Nicola. Always a pleasure to have you on the chat. Obviously, still can't hear. I think you stopped breathing. Could be your AirPods. Yeah, so what actually I think happened is I've got two iMacs, and I think my AirPods connected to a different iMac. So fantastic. Okay, back to where I was. Now we're talking about in the watch list here. What I was saying is that we've just added ETF Securities ACDC ETF to our watch list. And you can see here, if I click edit this, I've added a note. You can see I've added a note here to say I'm adding ACDC to my watch list because it has performed strongly and combines a mix of companies from both the ASX and global markets. In particular, it has modest exposure to Tesla, Pilbara Minerals, and the Japanese markets. So we can update that holding here by clicking that. And I find that this is a great way to add companies to your list, but then also look and see why you've put them there in the first place. I love this note feature and how easy it is. One thing you will also notice from today on, which I'm very, very pleased to say, is that SelfWealth has live pricing. So you will see these watch lists update in real time with live pricing, which is super cool. So it's all about, bringing more tools to investors and to traders alike. So you'll be able to see this update as we go through. Now, so in summary, we've talked about ACDC, we've talked about it being a thematic ETF and how you can position it in a portfolio. Some questions that you might want to ask as you go through the ETF Securities website or you go through any other ETF provider's website is some questions you might want to ask. How does this differ from other ETFs, like say like a vanilla ETF, like Vanguard's VAS ETF? How does it compare against competing ETFs? Is this ETF a higher risk or a lower risk ETF? Because we talked about with the ACDC ETF, it does experience volatility because it goes up and down a bit. And that's because it has holdings in industries and in companies that can be quite volatile from time to time. So how do you balance that up? Always go into the ETF and see what it's invested in. So this one here was for the FANG ETF, ETF Securities, and Nicola's on the line here, so you know that they're trying to do their bit to try and inform all investors. You can see here what is actually inside the ETF. And so this is really interesting because then you can look through the portfolio to see, does this actually match what I think I'm investing in? So the final thing is, when will you receive distributions? So maybe, since we've got Nicola on the line, I hope she can hear me. Maybe Nicola, you can tell us how people find out about how an ETF distributes its distributions or its dividends that it receives to its investors. Maybe you can point us to a resource in there too. Long-term, North Star says the volatility is less scary. Absolutely. And so this is something, North Star, that you've hit on, nail right on top of the head. In my opinion, over the long term, volatility reduces across almost all companies that are successful and all ETFs that are successful, because the ups and downs of the stock market become less pronounced. So we can see that here. So Jim KN2 says, can you explain the hidden charges when you buy/sell ETFs that the providers don't necessarily explain? Okay, so as far as I know, JMKN2, the big ones are simply the management expense ratio. That's the management fee that you pay each year. And then we're talking about things like the buy-sell spread. And so I can show you what that looks like. Now, this is something that's not within the control necessarily of every ETF provider on the day. So if we come into here and we look at the ACDC ETF, we can click on the SelfWealth tab on the right here. So Nicola just answered my question to her, which was distribution frequency is written on all of our product pages under the product information section. So if you're looking for dividends and that sort of stuff, you can find that all on there. So you can actually find out when you go in and you place an order for the ETF, you can actually place an order. I haven't actually activated my account here. I should have done this. But you can actually go in the page and you can see how many offers there are. So you can see here the offer price for the ETF, and I'll zoom in a little bit to make it even easier. So we can see here that has hit the offer price. That's the latest person selling it, is at this price. And the bid price is at $92.39. So the difference between these two prices, I'm being very general here, very basic, but JMKN2, the difference between this price and this price is typically what you can think of as a buy-sell spread. So it's the difference between the buyer and the seller, the buy-sell spread. So what you find is that a lot of the ETFs in Australia now are so big and have done really well and are really efficient that the distance between these two things has actually got smaller. So that's a good thing, because that is a cost which some people call slippage, because every time you buy or sell, that's a cost that you have to pay, because you have to pay the price that someone is offering. This is just like when you buy shares from another investor, you have to pay the price that they're willing to offer them at. Yeah, cool. And that's basically it. So that's basically the only other fee. So you've got the management expense ratio, and then you've got this right here. So Stevie Stone asks, I joined late due to work. Damn work. What stocks have been covered? So we've covered a few. We've really just covered the ACDC ETF, and we had a quick look at FANG and a few others, but it's basically just been ETF so far. So now, is there an ETF that invests in battery storage companies? So if you look at ACDC, that's an ETF which you could explore there, Rochelle. So let's go now and let's look at a bank. Now, I was going to talk about Commonwealth Bank, but if anyone wants me to, I'm going to take you through how I study a bank share, but also how you can look at the risks of a bank, how you can judge its margins, and so on and so forth. So if anyone wants me to cover a different bank, please let me know now before I dive into CBA. So I was going to do CBA, so I'll just continue with this unless anyone says, do a different bank, look at a different bank. Thoughts on MFG? So MFG is not exactly a bank, but we can have a look at that towards the end. I'll whack that on the list. MFG, but Suncorp. Ben, we've got Suncorp, Ben, Westpac, okay, Macquarie, NAB, dive into CBA, interesting to see how it is going. ANZ, NAB, all right, everyone's jumping in, so what I'm going to do is I'm just going to pick the most popular one in about 5 seconds. So we've got Macquarie Bank, we've got Macquarie, ANZ, BOQ, NAB, ANZ, Wiser, Coinbase, ANZ. Okay, I tell you what, I reckon we're going to go with, geez, it looks like ANZ is very popular. So I reckon we're going to have to go with ANZ because that's the one that's just been very popular. Okay. Maybe next week, if you guys want to tell me now everyone's saying CBA. All right. This is too hard. You guys are all this is too hard. We should have done a poll. All right. I tell you what, we'll do CBA, which is what I intended. But then maybe we'll compare some of the notes across the different banks. Okay, so let's start with CBA. So we're coming in here on the SelfWealth platform. You can just search up the top here. You just click CBA, bang, there it is. You've got the latest price because it's live pricing. You know that because right here on the page it says 12:38 p.m. Sydney time, 13th of September 2020, and that's exactly what it says right here on my iMac. Do both banks, says Stevie. Okay, I'm going to do both banks. Okay, so here we go. We all know who or what Commonwealth Bank is. It's Australia's biggest bank by market cap. It's also Australia's biggest bank by mortgage broking not mortgage broking, by mortgage lending and that type of thing. So what we can do is we can see, look, this is really interesting. It's number 2 ranked by ownership. If we come up the top and we go to ANZ, and we scroll back down, ANZ is number 6th by ownership, number 8th by weight. It's the 6th biggest company. What was CBA? If we scroll down to CBA, it's the 1st by market cap. It's the 3rd by weight. Okay, so if we come over to the ratios page, and this is where we get all that juicy data that we went through last week. There are some really interesting things here, but what I really want to point out as we get through this is how different banks are to regular shares. So last week we covered last week we covered Netflix, which is what we'd call a technology company, but it also has traditional measures of things like free cash flow. But as you'll find in just a moment, a company like CBA or ANZ, a bank, doesn't have traditional measures. So what we've got to do is we've got to be a bit more creative. We can still see that revenues here, and I'll show you in just a moment how that works. Just at the top here, is there a way to get the dark way of SelfWealth social media can be hidden from your screen when you are sharing? We know you are ad pronto associated with it. Okay, so I'm going to bring this up a little bit. We might be able to see here, and I'll zoom out a bit just to make it easier for you to see. Actually, I can bring that back down here. Hopefully that helps a bit there so you can see everything as you like there. Okay, so we can see net profit margins. This is an operating margin here for CBA of 50%. This is, if you just looked at this and you said, oh wow, that's a big operating margin, 50%, that's huge. And indeed it is. And if we come down here and we look at return on assets, we actually see that's very low. So we've got a really high EBIT or operating profit margin, this one right here, and we've got a really, really low return on assets. So why does that happen? How can a business have really low return on its assets, but really high profit margins? And the answer, drum roll please, that's just me tapping the desk. The answer is that CBA and all banks use a lot of leverage, so a lot of debt. They basically spin up their balance sheet to the point where they can lend more money, get more money, lend more money, get more money, lend more money, and they spin it up as high as they possibly can legally, and they get the tiny little profit margin, a little tiny amount of profit margin or return, but they do that at such scale with hundreds of billions of dollars, and then that's what produces the profit. So what am I talking about here? Let's talk about this a bit more. So here, whenever I look at a bank, so this is if you're going to write something down, if you're going to write anything down, this is probably what you're going to write down. Whenever you look at a bank, the multiples and the ratios that you should be looking at are things like return on average assets. Yeah, the beauty of capitalism, that's it. Sounds like my wife and my bank account, says Stevie. Yeah, leverage? Well, hopefully there are some controls in place there too. So return on average assets, you can see here, this is one of the key metrics that I'd follow. Return on assets, so ROA. And the reason why this is important, that tells you the profits effectively based on the number of assets, and I'll get to what assets are in just a second. You can see it over 5 years here, it's 0.87. You can see what the average return on equity is, which is another really important thing. In fact, a lot of bank CEOs have bonuses based on equity. So this is basically saying, what's the profit versus the shareholder equity? So what do shareholders own at the end of the day? Okay, so now we'll have a look. So just remember these numbers. Remember that we've got 0.84 for CBA of a return on assets for the last 12 months and a return on equity over the last 5 years of 12.64. Now let's go to ANZ. So here we can see return on assets for ANZ is 0.46, maybe half of what CBA is currently doing. And we can see its average return on equity over the past 5 years is 9.8. Again, a few points lower than CBA. So based on just these two metrics, these are just two, these are not the complete picture, these are just two of the key metrics, CBA is winning. Now, if we go back, there's another thing. What we'll do is we'll stay on here for a second. So if we come down here and we'll have a look at revenue change, and we'll go the revenue growth rate over the past 5 years. For ANZ, you can see we're on ANZ here. The revenue growth rate for ANZ is negative 4.36. Negative 4.36. So I'm going to do the same thing now for CBA. And we can see that the revenue growth rate here is negative 6.12. Now, you would say probably ANZ wins here. But we need to make sure that we keep in mind all of the different factors that contribute to these numbers. And I'm about to get to them in just a moment. Now, some of you in the chat, so Artem asks, is ANZ a bad investment? No. So I'm not saying that. What I'm saying is this is just one metric. So if I'm looking at a bank, I need to look at more than one thing. I need to look at a whole different bunch of stuff. And there are basically like 5 really key things that I look for in a bank, and we're going to get to some of them. These are just some of the metrics to help you compare. So just like you compare a bank account, you don't just go based on the interest rate. You might also look at the fees. You might also look at the other benefits that come with having a bank account, like a card or Apple Pay or whatever you want. We're doing the same thing, but we're comparing the entire bank. And so revenue growth. So it looks like ANZ wins here. But there will be some people in this chat who will be saying, hey, Owen, you shouldn't be looking at, you shouldn't just be looking at return on assets or return on equity. You should be looking at everything that is a tangible thing. So tangible book value right here is basically saying everything that's real. So let's exclude things that like a brand value, any type of goodwill that's on the balance sheet. Exclude that stuff and let's just compare the other stuff. So have a drink of water, Mr. Rask. You sound like you are losing your voice. Well, Artian725, I've actually got my coffee here. So maybe I'll just grab a swig of that. And great reminder there from SelfWealth. Jared saying that this is general financial advice only. If I answer your questions, remember the disclaimer from the top of the show where I talked about that any of the questions that I answer are limited to general advice. I don't know your personal situation, so we're just talking about stocks here and ETFs. Tangible as in properties. So North Star, good question. So tangible. Let's enough of this. Let's dive into the annual report. Let's jump into the news and announcements tab here inside SelfWealth. Let's jump down to price sensitive only because I'm looking for the annual accounts. So here we go. Now I'm just going to open this up and make this a bit bigger. So here we go. So we can all see what I'm looking at. Now I'm going to do a bit of a shortcut whenever I jump into a big PDF like this, and I see 312 pages. I'm going to go down and I'm going to press Control F or Command F on mine, and I'm going to go to comprehensive income. No, it's not working for me for today, of course. We'll go like this. And this, just pressing enter now, helps me navigate through the PDF extra quick. Okay. Just going to zoom out a little bit, guys. Okay, so this, you can see it took us to page 115 to find the financial reports. Command F. A Mac user, Stevie says. Yes, I am. Yes, I am indeed. Michelle says, love your enthusiasm. Well, thank you. I try and be a bit more fun with these things. So here we go. 115, page 115. Geez, I think they would give us the good stuff at the start. So here we go. We've got the income statement for CBA. Now, I want you to remember something about bank shares. On a podcast I did quite a while ago, and some of you may have already heard this, but on a podcast I did quite a while ago, I interviewed a very, very high-profile analyst that worked under people like George Soros and Howard Marks, if you guys know them, famous investors globally. And she said, her name was Dr. Mary Manning, she said that whenever you look at a bank stock, like this, CBA, opportunity is on the income statement and risk is on the balance sheet. So here we can see a few different lines. So when I come into a bank's income statement, the first thing that I look at, the very, very first thing is where does it get its income or its revenue from? And so here for CBA, what we can see for the entire group is $24.4 billion of effective interest income. Now, CBA brings in interest from mortgages, but it also pays out interest on things like term deposits, right? So you can see those two factors at play here. And what we are left with is net interest income. $18 billion. So $18 billion of lending income. So if I'm Commonwealth Bank, you can come to me and you can get a mortgage from me. In the past, you could also get financial advice from me. You could get insurance. You could get wealth management, like so other different types, like private banking. You can get all different types of services from me. I've got I own CommSec, which we all know is struggling because of all the innovative technology brokerage accounts like SelfWealth. And so there's all that other stuff that you can get, but then there's also the lending stuff like personal loans, mortgages, that stuff. So all the lending is this part right here. The other banking income is this stuff right here. So you can see that there, 5.2 billion. Now the reason why I'm looking at that, I'm saying billion max because up the top here it says million. So that would be, instead of me saying $18,839 million, I'm saying 18.8 billion. Just trying to make it a little bit simpler. Sorry if it's a little bit confusing. I'm using billions because this is such a big company. So here we go. And then if we come down, we can see here, thanks for that, Dennis, just for doing that. So here we can see the operating income of the banking net operating income of CBA is here. But what I'm trying to compare are these two things. Because in recent years, what we've seen is the banks drop all of their financial advice following the Royal Commission, and they've stuck with their net interest income as their primary focus. Now, the other things obviously we're looking at further down the income statement are things like loan impairment expense. So this thing right here. Now, what's actually interesting here, right? If you look here, if you go back 1 year and you look at the loan impairment expense from CBA. So what you can see here, and I'm going to take my time here, I'm going to explain this very carefully, is that you can see if we just come down the income statement, if we come right down to this line here, the net operating income before expenses for things like staff and buildings and that sort of stuff, that's captured in this line here. We can see that in 2021, CBA's results were a little bit ahead of what they were in 2020. We can see 24.4 billion versus 23.9 billion last year. But if we come right down here after the expenses and loan impairments, we can see that CBA has a lot more profitable net profit before tax than they were last year. Now, some people suggested that CBA just had a wonderful year, a really profitable year, which they did in 2020. Because remember 2021, because remember 2020 was all of the COVID stuff when they were really worried about house prices falling. I think it was even a CBA economist, or maybe it was just the news headlines, said that house prices in Australia could fall 30%, but they didn't. So what this line here shows you is basically the bad debts. What is CBA left over? What is it provisioned, this 2.5 billion and this 500 million for likely bad debts, for people who have mortgages falling behind and can't make their repayments. So here we can see last year they allowed 2.5 billion. This year they've allowed 550 million. So just by saying, oh, we're not going to allow as much this year, we're okay this year, the profit goes up. Yeah, so Michelle said it was CBA who said that. Yeah, I'm pretty sure it was, because I'm pretty sure I did a podcast on that topic. So here we can see that CBA's net profit before tax, even after tax down the bottom here, went way up because of an accounting change. Right? I just want to emphasize that point. Profit went up because of an accounting change. Whether or not you think that is going to happen again is up to you. But you can see here that the difference between these two numbers is around about $2 billion. And the difference in profit before tax is around about $2 billion. So their profit before tax went up because they changed their accounting for what they think is going to be bad debts. So CBA, I've got to hand it to CBA. They've done a really good job of managing bad debts. Very, very, very well done. There's a reason why CBA is the biggest bank in Australia. And so we can see that here. And if we come down the bottom, we can see that its net profit attributable to equity holders is 8.8 billion. Take into account any discontinued operations, 10.1 billion. So remember how I said before, opportunity is on the income statement. So opportunity is on the income statement. The risk is on the balance sheet. So this is the opportunity. CBA has taken the opportunity here to drop its loan expense. We'll get to, Dennis, good question. We'll get to note 3.2 in just a second. And you can see that it is growing its banking income. It's just not growing at $2 billion a year. It's just growing modestly. Operating expenses, still, they paid a bit more in operating expenses. And so let's go to note 3.2. So this is a quick tip for anyone that's new to accounting statements. If you come in and you look at this stuff and you're like, what does that number mean? You can just follow the note here further down until you find that note. So we're going to go down. I'll try and be quick because I've got a couple of things to get through. We'll try and find note 3.2. 2.2. These are long statements. Sorry, guys. If I knew the page number, I would jump straight there. We need some hold music or something while I try and find this thing. Here we go. Okay, 3.2. Here we go. So we can see that you can see the different provisions that CBA had made last year. Not net collective provision funding, so provision for bad loans, 2 billion last year versus 287 this year. So whenever a bank, you could continue reading on here, but whenever a bank changes or has to make an allowance for future bad debts, what they're doing is they're effectively making an accounting decision which can change their income statement. So keep that in mind. Yes, Hader says Control F, Command F, and then 3.2. Good point. Okay, so this is some of the things that I look for. Just to recap, how much interest income are they making versus other banking income? How many, what are their operating expenses doing? And most importantly, what is their loan impairment expense doing? I would check the notes to make sure I think that's reasonable. Down the bottom, we'll go this one, $8.8 billion of ongoing profits. Why are profits important? Because profits tell you how much they can pay out in dividends. Finally, let's just have a quick look at the balance sheet. I don't have much time, so what I'm going to do is just going to show you why these are different to regular companies. You can see here that as an asset, so if you and I had debt against our house, for example, we would say that the mortgage is a liability. It's something that we have to pay and we don't benefit from it. But if CBA provided that mortgage to us, they would count that as an asset because they earn interest on what we pay them every month. So we can see down here, CBA has $811 billion of mortgages or just other loans. So it could be like personal loans and that sort of stuff. Liabilities, you can see deposits and other public borrowings. So CBA gets its money from deposit holders who give CBA a term deposit and wholesale debt markets. So from overseas, typically like Europe or North America, they'll go to those markets and say, we need money to lend to our Australian customers. Can you give us some debt on a reasonable interest rate? And that's how a bank like CBA gets its loans to offer to its customers. But you can see here that if you were going through this, to be honest, if you were looking at this, you'd really have to be an expert. But you can use the tools that are available inside SelfWealth, and you can use these ratios. If we come back, we can look at the ratios and we can see what's going on, how the company's growing, how its dividend is growing, and those types of things. So there's one more thing that I want to bring up, which is, here we go. We can see the dividends per share on a 5-year average. Dividends are super important to a lot of Australians. So at the end of the day, we buy a bank like CBA for its dividend, for its fully franked dividends. And here we can see trailing 12 months. You can see, so you could compare the last 12 months to its 5-year average. And basically we want the dividend We want the dividend. Arjun says, seriously, drink some water, not coffee. You're making me feel dehydrated. I probably look dehydrated, but I actually feel okay. I'm actually giving blood tonight, so I hope I'm not that dehydrated. So here we can see a $3.50 dividend was paid in the last 12 months versus the 5-year dividend of $3.88 on average. A very established company, huh, says Northstar. Yeah, very established. So in summary, what we have done here with CBA is we've studied the income statement. We've done some comparables with ANZ. We've said, what are the growth rates compared to ANZ? What is the book value under this management effectiveness here? And use the averages because COVID has kind of skewed the numbers. Yes, you need to fast in order to give blood. Good on you. No, thanks, Steve. I did not know that. I should probably look that up because it's at 6 p.m. tonight. And so we also looked in the statements, how do they make their income, all of these types of things. One more final thing, I know I'm running over time, but one more final thing I want you to draw your attention to is the capital ratio here. Australia's banks are very well regulated. Have a look at the capital ratio. It should be well over 10% for CET1. So have a look at that, it should be there. Study the net interest margins. They should also be very competitive. I think off the top of my head, CBA has the best net interest margins of the Australian banks, but it's still not as high as some of the US banks. Sorry, here we are. We'll bring it up a bit so you can see it there. So in summary, this whole session, what we've done is we've talked about the stock picking checklist. Done. What does the capital ratio mean? Where are we looking now? Oh, the capital ratio. So what this means, Artem, is it's basically telling you how much safe, look at my air quotes, you can't really see my fingers in the screen, how much safe capital does the bank have in reserve to deal with market shocks? Safe. So all the banks are regulated by APRA and they have to report this. Sometimes they'll file it separately under the news and announcements tab in here. So we've talked about CBA. We've talked about the live pricing today, which is pretty cool. That is pretty awesome. The first Monday in which you can see live pricing on your shares, just here. So you can see, check it to see if it's got live pricing in the SelfWealth platform. I can see on my thing here, if I reload this page, it is 1:02 p.m. We've got live prices. The other thing is, remember you can do 3 trades in September for your chance to win 100 free trades. So if you're going to dollar cost average into an ETF, or if you're just going to buy some stocks, why not do it in September? Got instant deposits for under $1,000 with Osco. I went through the checklist. You can find that in the chat function there. You can also revisit this video and talk about thematic ETFs. We talked about ACDC and how it's probably a thematic ETF, good for maybe for the satellite versus the more boring stuff in the core. We talked about banks and the differences there. If you want me to cover any banks or any companies next week, I know that Vulcan is an interesting company a lot of people ask me about. You can jump into all of the videos we did for the last few weeks. I covered Vulcan quickly in a video a few weeks ago. You can also send any of your questions in via social media. Just use the social media tags. I'll get off this screen. Use the social media tags down here. I think they're down here for you. Use them and use the hashtag SelfWealthLive, and we'll try and answer the questions next week. So use them. You can find all of the videos on the SelfWealth YouTube page. That's just here. Hit subscribe, and I'll be back next week. So we've covered a lot of ground. Sorry, I do need to go, and apparently I need to drink some water. So I need to find some water before I donate blood. As always, you can use the support feature on selfwealth.com.au to say good day to the team, ask any questions. But otherwise, you can jump into the platform. Don't forget to add your notes when you build your watch list. That's what I've been doing. That's what I'm going to continue to do. Tell your future self why you're putting it on your watch list. Okay, wonderful. Yes, Ben, I'm a podcast host and I do all that stuff. So you can Google my name if you want to find out more about me. Sorry about the audio challenges today. Darn it, Apple making it so easy to connect. Thank you so much to everyone who jumped on the chat today. Ben, you can leave feedback by just dropping it in the chat and saying g'day. Thank you, Mick. Thanks, Dennis. Thank you for everyone that helped out today. There were so many great questions. LT, thanks, mate. I really appreciate it. Stevie, enjoy the H2O. Love it. Thank you, guys. Onwards and upwards, as they say. Cheers.